Okay, so I'm recording this video because the recording of the Zoom call was not good. So I'll try to go through the notes quickly so you guys can learn from it. Okay, we had objective structure and subjective structure. So objective structure is used for entry models and it's foundation for core concepts, meaning if in future you want to mark liquidity points, pre-balance ranges, we will use objective structure, okay? And subjective structure is mainly for scene inducements, for filtering relevant and irrelevant structural points, and it's also for main analysis. Main analysis. Make points for you, so you can see. Yeah. So subjective structure is how you normally mark structure. You just mark it with a naked eye. There's pro tips, and that is to zoom out until you don't see color of candles, and then you just mark highs and lows based on what you see. So high, low, low, oh, probably not. So there's not a low, I'm high, right, low, high, or probably a highs here. So anything that you see with your naked eye, let's see, will look something like this. Okay, really simple. When it comes to subjective structure and objective structure overall, there's a condition in which we don't really see structure or in which price action is really unclear. So, and that's when price is building up, okay? And it's usually bullish flags and bearish flags. So it's a bullish one, right? People trade with a breakout here. This is a bearish flag for price to do this, right? For price to have a bearish breakout. So I'll show you some examples of this quickly. And let's see. Okay. First one we had was this one. Yep. So really nice. Don't care about the SMTs, don't care about the context, but just a quick analysis for you. This was a weak high, we bought from a relevant low. This was an SMT, right? A smart money trap, and we are looking for a fake breaker structure or some sort of fake out to buy into that. Well, if you analyze this live and you used subjective structure at first, then there is no clear low or high. Okay, there's this high, but price doesn't really make a low for a long time, see? So it doesn't help us much. If you use objective structure, which would mean that price broke out of this low here, form bullish candle. So this is a new high, new low, broke towards downside again, right? You see, it's really messy now. Like, for example, even if this was a fake breaker structure, it becomes irrelevant after this buildup, right? So it doesn't really help us. And in this case, in these cases, it's better to just assume that it's going to be a buildup, wait to see what's going to happen. And then bam, the moment we have a bullish flag, so a flag towards downside, a bullish breakout, we can safely say that this is a structural low, this low right here. This is a subjective structural high. And now you can have structure you will have structure to play with. So a low, high, low, you can even say this a high. So if it looks something like this, and then bam, if you have a break towards downside, as I said before, then this would be a trap. And we would look for a buy, right? And this would probably be a fake breaker structure. So you see how clean the structure eventually becomes. Now to the next example. Let's see. Oh, yeah, I'm just speed running this, to be honest, because I already took it down once. Oh. Okay, so this is a second example. Same thing. We have some liquidity. We're looking for a short, but while looking for a short, you notice again, there's not much structure to play with, right? This looks fine at first, for example. We would look for a breaker structure here. This is an objective structure, right? It also lines up with a subjective one, so it's perfect. But you see how price is trying to stall and eventually starts building up, right? And if that happens, the breaker structure is losing its value a bit, its relevance. So for example, again, in this case, it's safer to assume that we are building up, and it's safer to wait for whatever price is going to show us. So if a bearish flag like this, a bullish breakout. So it's a bullish retail flag, right? Which also means that this is becoming a new low. This would in that case be a new high. This would be a first bigger structure that we see, but this is how we would mark structure in this kind of price action. And bam, you have a low, a high, and a low. Really simple. So I'll quickly go through the next one. Yeah, so it was here. Same thing. You're buying from a high FTMO rebalance. We have some liquidity. You're bullish. Well, because you're bullish, we're obviously reacting to a trap, right? And now same thing. You wake up here, you see this price action, you're on M15, and you don't really see much, right? The last external structure is really down here, and it doesn't even seem like structure. It looks like some liquidity point. So it doesn't really help us. Then the only solution is to wait for price to break the high and create a new low. But as price keeps going, we see that price is building up towards downside, right? You have a nice flag like this. You can copy paste it, right? So if you're moving in a flaggy way towards downside, you have a breakout towards upside. Even though price does not take the high, it's still a breakout, and we can still say that this is a structural low. And after this pullback, this is probably a new structural high. What happens? Price breaks structure towards downside, creates a new low, and bam, you have beautiful structure to play with, right? While live trading this. There's one more example that I have, but you can find more, of course. So same thing, we are trading swing right now. We just broke out of this daily range, this huge daily range. And yeah, see, the last structure we would have, the subjective structure would be somewhere here, right? It's really far. So waiting for this would take another month. Then we would use objective structure. We could try objective structure. On H4, there's nothing here. And the nearest bigger structure is this one, right? So again, it doesn't really help us in any way because of how much price action was printed. Then we could even go to H1 to see what's happening. Here we have a first breaker structure on H1, but you see how small the breaker structure is compared to the whole range, right? How irrelevant it is. So in this case, again, it's better to wait. It's better to see what price is gonna do. Although we don't have structure, price printed this nice, beautiful trend line, 1, 2, 3 touches. We can copy this trend line, of course. Again, perfect two touches. Always copy paste it, okay, from here to here. Don't do any weird build-ups like this. And then we finally have a breakout towards upside and even a break and retest. So at this point, you can say this is a new structure low, not here because it doesn't break out, right? Not here because it doesn't break out, but here because it finally broke out. Again, it does not break the structure. It does not have to break the structure. But the moment it pulls back, you can say this is a structural high. And again, bam. So you have a new low. So this is probably creating structure. In practical sense, we are not inducing any sellers here, by the way. If you look at this build up, nobody is really selling this. Okay, this is a bullish retail pattern. Also break and retest. But nobody's buying this. But the moment, nobody's selling this. But then when we break up from here, people, we can say majority is buying, right? And the moment we break down, we break this low, we can say majority is selling again, right? But not during this. That's why it's important. Then again, price breaks the high, price stops out the sellers, stops out all the sellers here. And this all is funding the next bearish move. So yeah, this is all regarding the build-ups. Now, let's talk about objective structure and subjective structure again. As I said, subjective structure is mainly for analysis. Objective structure is mainly for entry models. Sometimes objective structure will give you an entry with inducements, but subjective one will not give you an entry model, right? It will not induce. So how can you see this? For example, if you watch my YouTube videos, you see that every time or most of the times when we want to sell, we want to see some early people being induced, right? They want to see a break of structure, maybe a trend line towards downside like this. But sometimes this only happens on objective structure and it's not visible on the subjective one. So let's say this is the subjective structure and this is objective structure, right? Here. This would be objective, or maybe even higher. So for example, objective structure is giving us a fake break of structure towards the downside. What does this mean for us? It means that with a level, with enough confluences, it is enough for us to take a trade here, but it is not aligned with our overall analysis. Our overall analysis based on subjective structure is saying that we are buying towards upside, right? That we are just breaking up towards upside. There's no sign for a swing sell. So when I take this trade, for example, I'll target something little here, right? But then if price does this, breaks subjective structure, breaks major structure, and then comes back and then sweeps this relevant high, then we can say for sure that this high is gonna be a swing sell, right? It's gonna be a big sell. One example from the most recent market right now. This is 28th of October. You can see clearly there's some trend line like this, right? So I'll start with subjective structure, a high, low, high, low. The structure seems too small, so I don't care. And probably high and low, right? So this was the first fake break of structure before the inducement, before the swing move. But if you look closely and we mark objective structure, you can see what Asia did here. We had, okay, so we broke out of here. This would be objective high, objective low, objective high, objective low, objective high, objective low, high, low. And you see we have a first break of structure finally already. Then price takes Asia high, right? Asia ends, we take out Asia high. And what happens? Bam, we do have a trade. But because of the fact that it is on the fake break structure, on objective structure and not on subjective one, this inducement is not as relevant as this one, as the big one, right? Like it's enough only for a small move. If you take a short, for example, here, you know, you're not hoping for a swing move. You're just hoping for some short-term movement here, like this, maybe. Beautiful 1 to 5, right? But the moment it aligns with your main analysis, with your main structure, you can catch the same cell using same principles here. Of course, you need more confluences, but we're not going to talk about it. And you can swing the whole move, right? Very, very easy. Same thing here. The structure does not give you enough confirmations for a swing buy. So this is subjective structure, right? If you're just, again, I'm going to mirror it. You're just making highs, high and lows like this, and then we finally break towards upside. But we did not have any inducement before that. We did not have a fake break of structure, nothing before that, right? So when this happens, I already know that this low will be taken out in future, in near future. I don't know whenever a sell setup occurs, I'll take it, right? But not now. But if you look closely on M15, on objective structure, you see there's this nice fake break of structure towards upside and inducement towards downside. So we do have an entry model for a buy, right? So for example, when I take this buy, and again, it doesn't align with the external analysis, I'll just probably target this, or maybe something internal. And then I will hope for this low to be taken out before the big buy, right? So I hope this is clear for you. It should be really easy. And now let's go to the objective structure and its rules. Oh, okay, so it's here. Perfect. So here, when we are using objective structure, it's a strict set of rules. Okay, you just follow it like a robot. You don't care, you don't have any opinion, nothing. You just do the same thing and follow the rules. So technicals, we track candle by candle. We don't care about pullback and momentum, right? We don't try to measure the movement. We don't try to evaluate the movement, nothing. We just look at candles. We also don't care about the size of the candles. One range can be 200 pips, another range can be 20 pips, and it's the same relevance when it comes to market structure. Yeah, as I said here, yeah, no, we don't see it as impulses in retracement. After every single break of external structure, we want to see an opposite color candle close. So we have a bullish break, since we have a high low. The moment we close bearish on the same time frame, we are gonna have a new high. Okay, price pulls back again. You want to see price in ranges. So this is low, this is the high. We only care about the last range. We don't care about any previous structure here or any high time frame structure. If we are marking daily structure, we stay on daily. If we mark M15 structure, we mark it on M15. Okay. So yeah, one candle can be structure too. So for example, price can break here. Then it close is bearish, right? So that would mean that this is a new high. Then, and we break it again. So let's say from this high, we go straight up. This would also mean that this high, this singular bearish candle is a new structural point. And I hope I said everything that was important. One more thing. If we form a high here and price decides to open a new bearish candle that takes out the previous bearish candle, we simply just move the high from here to here. In live market, what this would mean is that this could have possibly been a stop hunt, and you can take a mitigation from this if you have more confluences and the context aligns. So this is clear, this is clear, this is clear. Bam, done. Okay, so let's go to the chart. So I'll start marking structure here. You see this high. If you break out of this high, right, we form a bearish candle. So this would mean that this is a new high. We also broke out of the low. So I'm just going to assume this happened. And this would mean that the last break was a bearish break. We need a bullish candle. We form a new low, right? Then we broke the low again, confirming a new high. When we broke the low, we're looking for a bullish candle. So again, a bullish candle, new low, right? New high. Then we broke the low again, confirm this high. And then the last break was bearish break. So we form a new low here. And the only thing we care about is this range right here when we trade live, when we analyze live. So it will look something like this, right? We don't care about any of those highs since we didn't break the structure yet. And we also don't care about, for example, breaking out of this low, right? We only care about the last range right here. If you want to analyze this low, you can go to weekly and have, your own weekly structure here. But when we're marking objective structure on daily, we don't care. Press broke towards downside, confirming a new high. If you're confused, you can also use diagrams to to filter this out, right? To have an idea. So there's no high or low missing. Perfect. Then we can continue. So we had a bearish break, waiting for a bullish candle, and bam, we have a bullish candle confirming a low, but that doesn't mean that the low has to be the candle. Okay, it's just confirming, but the lowest point is the structural point. So we have a break towards downside, confirming a high, right? Real simple. And again, if you're confused or not sure, you can just show it like this. No, and you see there's no high or low missing. But for example, if you didn't mark this one, then you obviously cannot make the diagram, right? Like you cannot mark the new low without this high. So let's say this low happens, bam, and you have one high missing right here. Okay. New low, new high, break of structure towards downside, bullish close, so that's a new low. Another break of structure down, a high, a low after this bullish close, broke towards upside, a new high. And again, you don't care about this, you don't care about this. Even if price goes up and breaks this, you don't care. Okay, you can just delete this and only care about the last break, the last range right now. So the last range is last low and the most current high, which is this. Nothing happens, we broke the high, confirming a new low right here. A high, a low, a high, a low, a high, and again, we broke towards downside, bearish, 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 bullish. So this would be one candle structure, right? Another 1-2 candle structures. Bullish, new low, new high. And again, you don't care about this high. Just the most recent break. Bearish close, high low. Okay, so this part is really messy. You can skip it if you want. And you can just go to the good one. So bam, 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 bam. Again, last break was bearish. So bullish close. Right? We don't care about internal. We only care about the external range. So we only care about this. We broke towards upside. The last break was bullish. We have a bearish candle. This is a new low. New high. We broke up, making this a new low. After breaking up, we form a bearish candle, which means this is a new high. Then we broke down for a bullish candle. This is a new low, high, low. Right? High, low, high, low. Nothing complicated. High, low. Right? We broke out out of the high again. So see, we form a bearish candle here, then we engulfed it with another one. So you can just form a high here, then a low here. Again, bearish candle, high, low. We broke up, form a bearish candle, that's a new high. Then we broke down, from a bullish candle, new low, broke down again, confirmed the high, broke down, closed bullish, new low, right? And then again, bam. Really simple, nothing hard. Just like this. Low, then again, we broke out of the low, we have a new high. We formed, last break was bearish here, so bullish candle is new low. Then we broke bullish, new candle should be bearish, so this is a new high, and then new low, and new high. So just like this. Okay, yeah, I think this should be enough as a replacement for the structural part of the Zoom call. So yeah, peace.